Oh, there we go. We're just gonna check the video feed. All right, so are we on? Yeah?
Yep.
We are on. All right. Cool. Perfect. So, what's going on, everyone? Let's check the audio, make sure does it work?
Yeah.
Yeah? All right, what's going on, everyone? Josh Albayero here, and we have been trying to connect all day long, and we've had a lot of difficulties. So whether you're watching us on IOOGO Tax or my Facebook page, Josh the Tax Guy, welcome. We finally made it. We're here, and today we're going to talk about the earned income tax credit. So just want to make sure that we're displaying everything. The earned income tax credit, and this is a credit that will boost your refund. You hear of the $5,000, $6,000, $10,000 refunds. Most of the time, these refunds come because of tax overpayment, meaning that you overpaid your taxes throughout the year, or they come because a credit, the earned income tax credit, was added. And typically all your taxes paid throughout the year were refunded to you, and because of your low income and the size of your family, you were able to receive, you qualify for this credit. So that's it. That's all we're going to cover today. We can go home now, right? No? Okay. So I'm gonna go into some details. We're not gonna be here that long, but I do want to, it's tax time, so it's important for you to understand. I want to make sure that as you are using IOOGO Tax, or as you are going to your tax pro, that you understand how important it is to qualify for those credits now, and the qualification process, and how the IRS is now using different methods to ensure that that fraud is being prevented, and how you also need to watch out for tax preparers or anyone who prepares taxes, whether they're CPAs, tax preparers, my brother, anybody who can say who will say, hey, I can get you a big refund, as but you have to give me a percentage of it, right? So watch out for those big refunds. Remember, if refunds are not magical. If you don't pay taxes, like my daughter says, right? If you don't pay taxes, you owe taxes. And if you are single, more likely you don't qualify for credits unless you're a student, or any, typically you're not going to qualify for any family credits, right? So very important that you pay attention to that. And so today we're going to talk about the maximum amounts that you can receive. How do you qualify? Who's a qualifying child? And how do you enter this information into IOOGO Tax? Now, if you are someone who knows how to use a computer, you have basic computer skills. What do you define, Christy? Basic computer skills. What are they? You know how to use your computer to navigate on Facebook, right? Sign up for Facebook. You have filled out a job application before online through Career Builder or Monster. You frequently use an email. If you use a computer frequently, right? Then you should be able to follow the same steps tax preparers use to file your taxes. And why do I tell you that? Why am I so confident about it? Is because I used to be a tax preparer, and I am an enroll agent now, but that's not the point. The point is that entering your information into the software does all the work nowadays. Whether you go to a CPA, or you go to a tax preparer, or your mom does your taxes for you, the software does the work now. So we created a software called IOOGO Tax that does your taxes like this, maximizes your credits, your refund, your deductions in minutes. Today we're going to talk about earned income tax credit, and when you enter a dependent into IOOGO Tax, IOOGO Tax will calculate the credit for you in a matter of seconds. All you have to do is answer yes or no to certain questions, and based on your income and your filing status and the size of your family, your credit gets calculated. Okay, I probably just blew your mind, right? The credit is not magical. It's based on how much money you made, the size of your family, and your filing status. Boom. You have either qualify or not qualify for the credit. So let's go and let's talk about the earned income tax credit, and let's talk about who is a qualifying child, because this is one of the requirements. You have to have a qualifying child, and if you paid attention to my podcast yesterday, we talked about the child tax credit, which is the $2,000 credit. Today we're talking about the earned income tax credit. And what's a qualifying child? Well, no different than yesterday. A qualifying child is that child younger than 17, again I say it, younger than 17, who lives with you for more than half of the year here in the United States. So lives with you for more than half the year in the United States, and that you pay for more than 50% of the living expenses. All right, so let's simplify that. You pay for all the expenses, 50% or more. You pay for more than 50% of the expenses. 2, lives with you here in the United States for more than half the year. And 3, younger than 17. So as I said yesterday with the child tax credit, once this child turns 17, you can kiss this credit goodbye, right? At least for this child will no longer count for this credit. Well, can I count this child as a dependent? Yes, you can, right? That's another conversation. But for this credit, you cannot. Right? The system is not going to calculate. The system is going to translate the law, right? So the law, it says that your child is 17, so he no longer qualifies for the earned income credit. So your refund goes down. I just made my own sound. Yeah. So the refund goes down, right? So it's nothing. Your tax preparer. Don't get mad at your tax preparer. Don't get mad at your mom if she's still doing your taxes and you're trying to get her to qualify your kids for child tax credit, right? It's the law. It's the law. So, all right. So let's move on to the next thing, right? How is it that you qualify? So I just told you about a qualifying child. So that's one of the pieces of information that one of the qualifiers. So you have to have, number one, you have to have a qualifying child, right? A qualified child. I'm sorry. You have to have a qualified child. So I just described what a qualified child is, right? Number one, you have to have a qualified child. Number two, your income has to be lower than a certain amount in order to be able to qualify for the earned income credit. So number one, you have a qualified child. Number two, your income has to be in a certain threshold, and I'll tell you what those amounts are. Because once you hit that amount, you no longer qualify, right? It doesn't matter if you have 20 kids. Once you hit that amount, it's over, right? No more credit. And number three is you have to have your filing status has to be either married, filing jointly, or head of household. So single people and divorced people cannot claim this credit, right? So let me rephrase that. Single people or divorce, someone who's if I'm divorced but I don't have I'm not the legal guardian, right? So I divorce my wife has the legal rights to claim the kids, right? So I wouldn't be able to claim that credit, or if I was single, I wouldn't be able to claim that credit. Now, if I am a head of household, what's a head of household? It's, someone who has kids or dependent responsibility who is not married, right? So if you're not married, you're single with kids, the law considers you a head of household. And if you are married, then much better, right? So let's talk about how do you qualify. Number one, you have to have a qualified child. Number two, your income cannot surpass a certain threshold. And number three, you have to be either married, filing jointly, or as single with dependents, also known as head of household. So very simple. The system will do this for you, right? How do you think your neighbor became a tax preparer? Look, my brother last week, was it last week, right? My brother last week, I sent him to the IRS website. He got a PTIN, a preparer's identification number, in less than 5 minutes, no education required. And then guess what? Software is so smart now that it tells you what to do. Like, you follow the software, right? What's your kid's name? What's your name? What's your address? How much income did you make? Do you pay for your kids' expenses all year long? Does a kid live with you? And you answer yes or no, and boom, credit calculated. And you can do this yourself. Now, if you don't have basic computer skills yet, go pay someone. Don't try to do it yourself, right? You're gonna frustrate yourself. So, but if you have basic computer skills or more than basic computer skills, you should be able to file your own taxes. It's not complicated, unless you're Donald Trump or Mark Cuban or anyone who has multiple companies and multiple streams of revenue. Then your taxes are not complicated. But I'm self-employed. Still not complicated. Self-employed just means that you bring income and possibly you have expenses, and whatever's left, that's your taxable income. Simple as that. All right, so let's get into something very important. What does the IRS say about the limits? And I'm almost done. This is going to be very quick. So I want you to take a look here. It says qualifying children claim, right? And if you are single, head of household, or widow, let's just focus on 3 kids. I want you to take a look at single head of household, right? If you have 3 kids, you cannot make any more than $50,162. Because if you make more than that, then you don't qualify for the credit. That's your limit. That's your limit. Okay? So if you're married filing jointly, you have 3 kids. So you see on the very top it says 0, 1, 2, 3. Those are the kids, right? If you're married filing jointly and you have 3 kids, you cannot make more than $55,952. If you do, then you don't qualify for the credit. We're talking about adjusted gross income, right? So so it's very, very easy. The software will do the math for you. You're going to enter your income information. The software is going to look at how many kids you have and if they are qualified kids, right? So it's going to look at how many kids you have and if they are qualified, and the software is going to do the math for you. And it's going to tell you, hey, you don't qualify for this credit because you have 3 kids and you make $60,000, so you're automatically disqualified. Or it's going to tell you, here's your credit because you have 3 kids and you made $49,000, right? So you let the software do that for you, just like your tax preparer does. Okay, so let's go back to the screen, and you can see the maximum credit amount. So when I started the cast, I talked about having people having large refunds, right? And this is why, because some people with low income, some families with low income who have 2 or 3 kids can get the maximum earned income credit. So a family who earns $30,000 and has 3 kids or more can maximize the credit. So for those of you who are out there, who are there looking at me and thinking or asking yourself, how is it that a family of 5 or a family of 4 can survive with $30,000? That is the question that the tax preparer will be asking you if they're doing their job. Hey, this doesn't make sense, right? You make $30,000 and you have 3 kids, you know, and then there's mom and dad and 3 kids, $30,000, really, right? Or and then the preparer's gonna ask you questions, right? The same, you know, with when you're filing yourself, right? You know, in IOOGO tax, you know, you know, it's gonna be the same situation where at some point you are preparing your tax return and you're gonna have to prove to the IRS that you don't have any more income, right? Maybe cash income is not being reported, right? Maybe you get a lot of child support and that's why you can afford it, right? So as long as there's a legal valid justification, then you have no issues, you have no problems, right? But always be, especially now, if you file today, you won't get that the tax refund very soon, because if you have this credit in your tax refund, the IRS is going to hold the credit, investigate, make sure that there's nothing fishy in the report, and then release the credit or ask you for more questions. So anyways, let's move on. And so I just talked about the income limits if based on your filing status. Remember how I told you your filing status determines everything? The software's so smart now. You tell me what your filing status is and I can tell you what you can do. Tell me how many kids you have and I can tell you how much credit you can get. Boom, simple as that. Tell me how much money you earn and I can tell you how much credit you qualify for or you don't qualify for. So simple as that. And then, so you have here that the maximum credit is $6,557, and then it just goes down. So I want you to take a look at this, and I'm gonna switch back to the screen. I want you to take a look at this. The way this credit works is the more income you have, the less credit you're going to get. And this is where a lot of people get in trouble, because they try to hide their income so that the credit comes up. Now, I got to tell you this, right? You know, getting credits, it's not really a bad thing. If you deserve those credits, if you can prove that you deserve those credits, then, you know, the IRS will not make your life difficult. But if you are hiding income, not reporting all the income, or maybe you are married and you're reporting separately so that you can maximize your income, then you could have trouble with the IRS. And you're probably going to tell me, hey, but such and such has been doing it for many, many years. Okay, well, you know, if you want to chance it, chance it. Don't say I never told you so. So, all right, check this out. You're going to go to IOOGO Tax and you're going to open your account. Look how easy it is to do open your account. You're going to enter your personal information, which includes your kids' information. I mean, you know your kids' info, right? That's, you know their names, you know their addresses. Should be the same as your address. You know their income, shouldn't have any income, right? So you know all their info. You can enter it in the system, right? Then you are going to enter your income, like your W-2, your 1099s, right? The system is going to calculate. You're gonna now the system knows that you are single with kids, that you've made $32,000 in income, so the system will begin to calculate your information, right? Simple as that. And then you're going to answer yes or no to some credit questions, like, does the kid live with you for more than 50% of the year? Do you pay for more than 50%? You know, those qualifying questions, you are the only one who can answer. Do you remember the tax preparer asking you that? So just like you tell the tax pro yes, you can just simply click yes on that return, right? So, all right, and then after that, within a matter of minutes, you should be done. We're averaging 12 minutes right now to complete our return. So there you go, and you'll have your refund preview, and then you tell the IRS where to deposit that money, or you tell the IRS how you're going to pay them in case you owe the IRS. And then you e-file. How many steps was that? 1, 2, 3, 4, 5. And if you want to count the e-filing, pushing the button e-file, that's 6. All right. So this has been very, very, very educational. I hope that you can take away something important you can share with your friends. You know, if you are seeing this cast, if you're seeing this video, share it with your friends, especially those who believe that tax refunds come out of out of the sky, right? That they're magical refunds that the preparer pushes a button and $11,000 show up, right? It doesn't work that way. You know it now. You know that if you don't pay taxes, then you have to, if you don't pay taxes throughout the year, then you owe taxes. And if you're single, you don't have any credits. So if you have any questions, leave them in the comment. You can feel free to send us a message directly. We are IOOGO Tax. We're here to help you. Tax season is here, so maximize your credits and deductions in minutes.